Ever wonder how traders get access to huge capital without risking their own money? That's where prop firms come in. So in this video, I'm going to be breaking down step by step what prop firms are, how to use them, and how to actually find success when it comes to trading prop firms. A prop firm, short for proprietary trading firm. They give you access to a large amount of trading capital or buying power. Then you trade their capital, you make money, they take a cut of what you make. It's a win-win situation for both sides. So you might be thinking, how are prop firms able to fund so much capital to so many traders out there, new, skilled, or traders that even have so much experience in the markets? How are they able to do it? Basically, I'm going to get into that. There are 3 steps that come with prop firms usually. It also depends on what prop firm you go with, but in a sense, it is usually 3 steps, and I'm going to break down each step for you right now. So let's get into it. Okay, so now you know what a prop firm is, but how do they work? So usually there are 3 steps when it comes to trading with prop firms. So in the first step is going to be the evaluation phase. All prop firms have this. What evaluation stage is you're proving yourself to the prop firm. You're proving you are consistent, you are proving you are profitable, and you are proving that you are trusted with their capital when you do move to a funded account. So the first rule I'm going to go over when trading an evaluation account or going through the evaluation phase with prop firms is going to be the consistency rule. So most prop firms have a consistency rule with your leverage, with how much you can make in a day or a trade, and with how much you have to make when passing the account. So again, I'm going to be going over top step because that is going to be the example for the video. So when trading an evaluation account, let's say we are trading a $50,000 account. Okay, so again, we're going to go over a 50K account. So when trading a 50K evaluation account, so you're getting funded and you have the buying power of a $50,000 account, you have a 3K profit goal to pass the evaluation phase, right? Before you go to step 2, which we will get into. So you have a 3K goal, and first we are going over the consistency rule. The consistency rule with this 50K account is going to be $1,500 in a day or in a single trade. So you cannot pass the account in one trade. You cannot make $3,000, and you have to make $1,500 or less in one trade or one trading day. Alrighty, the next rule I'm going to be going over when it comes to the evaluation phase is going to be the minimum loss limit on that account, right? So before I get into that, what a 50K account is, because I want to give you guys a very clear and honest understanding on these accounts, is if you buy a $50,000 funded account, you do not have $50,000 in your account. It is not a $50,000 account. Again, that is just your buying power. The account size is going to be your minimum loss limit. That is going to be the exact same with the evaluation phase and the exact same with the funded account. The reason for that being is because that is how much you can lose. If you have an account and you can only lose 2,000, that is going to be your account size. So think about that when you're sizing, when you're going into trades, and when you have a stop loss. How high of that stop loss, what percentage of that stop loss is your account size, which is going to be your minimum loss limit, right? So what the minimum loss limit is the amount of money you can lose on the account before it blows. So again, 50K top step account is going to be our example. You have a consistency rule of making only $1,500 either per trade or per trading day, and you have a 3K target goal to pass the account to go to step 2. With this minimum loss limit, you have a $2,000 loss limit, and if you hit that, the account's done. You're going to have to refund it and start fresh. So again, just so it's clear and we simplify it, you have the account is at $50,000. If the account goes under 48,000 or 48,000, the account is blown. If you hit your 3K target goal when sticking to your consistency rule of $1,500 either per trade or per trading day, then you are going to pass the account and you will go to step 2. The last thing I'm going to get into when talking about the evaluation phase is going to be this minimum loss limit, right? What this does, it actually trails your account balance as well. So let's say you start the account, it's 50,000. Let's say you make $1,000 on your first trade. If your first day trading that account, your account size is going to be 51,000. So your minimum loss limit goes from 48,000 to 49,000. So again, you still have that $2,000 minimum loss limit, and it's going to trail all the way until you pass the account. Alrighty, so if you stuck to your rules, you stuck to your sizing rules, you stuck to your minimum loss, and you stuck to your consistency rules, and you hit your $53,000 target, your 3K target, boom, congratulations, you are now on step 2. You are funded. You are a funded trader, and you are now funded $50,000 of capital or of buying power with that prop firm. So now we are in step 2, and this is when you become funded. So let's get into it. So now that you are on a funded account, your balance is not going to be 50,000 anymore. It is going to be $0. That is going to be your starting balance on the account. Your minimum loss, depending on your account size, but again, we're going over a 50K, it's going to be the exact same. So if you are on a 50K account, you pass the evaluation phase and you become funded, you have an account balance on that funded account of $0, your minimum loss is 2,000, and you have no profit goal. Alrighty, so on a funded account, you are now on step 2. So the first rule I'm going to be getting into is the sizing rule. So when you were on this evaluation phase, you were able to size up to 5 minis or 50 micros, right? Your sizing rule now goes down when you are just starting your funded account to 2 minis or 20 micros, which again, in my personal opinion, when it comes to sizing, I personally do not think you need to be sizing any minis when it comes to a 50K account, because again, your account size is not 50,000. It is what your minimum loss is going to be, which would be a 2,000. So in a sense, yes, you have $50,000 worth of buying power, but your account size is $2,000. If you are sizing 1, 2, even 5 minis especially, you are going to most likely blow that account in 1, 2, maybe even 3 trades, but in a sense, you're definitely going to blow the account. That's why I always personally recommend micros for partials, and also just because the sizing is more equivalent to your account size. So yeah, that is your sizing rule. Your sizing rule is going to go down from 5 minis to 2 minis. Alrighty, so the next 2 rules I'm going to be going into for your funded account is before we get into those, I'm going to go over that the rules that come with the evaluation phase for the account size that you bought, it's going to be around the same rules with a funded account. Because again, these prop firms want to see consistency. They want to see that you are a proven and profitable trader when it comes to your psychology and your trading, and they want to see consistency in the markets. So again, I'm going to get into the kind of the payouts and profit splits with this rule, but when you are on a funded account, again, this depends on what prop firm you go with. With Top Step, you need 5 $200 days to get a payout. So let's say you open up a funded account on Monday. You make $200 Monday through Friday without taking any losses. You can technically take out a $500 payout. Congratulations, you finally made money with a prop firm. Again, I'm just going to get right into it with the minimum loss for these funded accounts. Again, is the exact same thing with the evaluation phase. You have a $2,000 minimum loss, which again is your account size, and all the money you make until you make $2,000 on that account, your minimum loss is going to follow you. Again, that is why they are built for you to lose, but we'll get into that a bit later in the video. So keep that in mind until you get the account above $2,000. So the last step of prop firm accounts is going to be payouts and the profit split. That is the goal, that is the end goal, and that is where you're going to get after watching this video. So the first thing I'm going to go over, which we kind of went into the funded, is you're going to need 5 days of 200 plus trading days. So you can trade Monday through Friday, make $200 or more each and every single day, and you can take out a payout, a 50% payout. Again, these don't have to be consecutive. They don't have to be day after day after day, and you don't have to, the loss won't affect it. But yeah, you do need 5 $200 days before you request a payout. The next thing I'm going to get into is your first $10,000 that you make on the prop firm account is going to be 100% yours. You can take out $10,000 payout, you could take 2 $5,000 payouts, but the first $10,000 is going to go straight to you. After that, when we get into the profit and split, it's going to be 90-10. So what that means is 90% of what you make, you take out. 10% the prop firm is going to keep. And then the last payouts / profit split I'm going to get into is the minimum payout request has to be $125 with Top Step. Obviously, usually that's not going to happen, but you never know. It's something good to know as well. But yeah, so that is going to be step 1, step 2, and step 3 of these prop firm accounts. So let's get into how they are built for you to fail. Alrighty, so again, now I'm going to be getting into how prop firms are built for you to lose. So again, a lot of traders, whether they're brand new to trading or they have a lot of market experience, a lot of traders trade with prop firms. But something that, not a lot of people talk about is how they are built for you to lose. I'm going to be completely honest and blatant with what I'm talking about with prop firms is it is a very low chance that you are going to find consistent success with payouts and trading with these prop firms. But again, that is why you're here and that is why you're watching this video. What I have up on the screen right now is kind of just a statistic on these prop firms and how successful the traders are. Again, I'm not quite sure how accurate this is, but in my opinion, it's pretty close. Just from what I've heard and what I've seen with people trading prop firms is, as you can see, 1 in every 20 traders pass prop firm accounts. So again, that is 5% of all traders who trade prop firm accounts actually become funded. Once they are funded, only around 20% actually achieve any payouts. So the 1 in 20, that is maybe, I personally think it's around 7-10% actually become funded, but around 20% that actually achieve a payouts. I agree with that completely. A lot of new traders, they are able to pass these evaluation phases, but once they are on a XFA or a funded account, that is when the psychology issues come in a sense, because you're like, oh my god, I can start making money, or oh my god, I can start losing money now it's real, right? So again, if we think about this statistically, again, 5% of all traders who trade prop firms actually become funded. Once they're funded, only 20% of those funded traders are actually able to get a payout. We're not even talking consistent payouts here. So overall, of all traders who trade prop firms, only 1% actually make money. So when you hear, 99% of traders fail, no, 99% of traders quit. When they run through, obstacles, when, you pass an account, you're funded, but you blow the account the next day, the next week, and you're not able to get a payout, that is when 99% of people quit. So if you are here and you are actually built for trading, you have to be ready for the psychology issues. You have to be ready to lose money and lose in the market if you actually want to see success. But again, I'm going to be going step over step of how you can find success with not just payouts, but with trading prop firms as well. So after reading that statistic, you might be a little confused on why it is so difficult to pass these prop firm accounts to become funded and especially get a payout with these prop firms. And again, that is why they are built for you to lose. They're built for every single person to lose. They live off of these activation fees, these constant blown accounts, and you just rebuying these accounts because you're like, oh, it's only $50 or it's only $150 for the activation fee, which yes, having, the ROI on these accounts is the main goal, but that is what sucks in new traders with blowing these accounts, blowing these funded accounts, all these fees that they are collecting. In a sense, they're actually going straight back to what they are paying out their successful traders with. So you might begin wondering how they are built for you to lose, and that is because of their rules. The rules that prop firms put on these, not just these evaluation accounts, but these funded accounts as well, are built for you to lose psychology and trading wise. So one of those I can get into is the minimum loss limit, right? The trailing loss limit takes a huge effect on traders, especially who over leverage, right? If you have an account, let's say you're on a funded account, you start at $0 and you make $1,000 on the account. Now, if you lose a few trades, the account can go into drawdown and you can, in a sense, start blowing your account pretty quickly, right? Again, something that traders definitely overlook when trading prop firms accounts is having the size of the account, the buying power of the account. That is the thought of the account size, which is not true. That is your buying power. So you have to kind of differentiate the topic of buying power and account size. If you are on a $50,000 funded account, it is not $50,000, it is $2,000. It is always going to be your minimum loss limit. So how do you find success with prop firms? Even though the margin of traders who trade with prop firms and actually find success with payouts, or especially consistent payouts, how are you going to find success and how are you going to be that 1%? Let's get into it. So the first step is going to be mastering your strategy. I know this sounds very, very simple, but a lot of traders, especially new traders, they don't, and they overlook this step, right? So what I mean by mastering your strategy is starting off with a demo account, especially if you're new. Starting off with a demo, starting off with paper trading. Find a strategy that you like. It doesn't matter what it is, because you can find success if you really perfect it, right? So paper trade and demo accounts for the first few months before you even touch prop firms, especially if you're new to trading. Find a strategy, find a mentor, go on YouTube, just find it, make it work. If you really want this, you will know and you will find a way to make it work. So you found your strategy, you've been trading it on a paper account or a demo account for a few months, and you have confidence in the market and you have confidence in your strategy. How are you going to differentiate your strategy and yourself as a trader from other traders? How are you going to be that 1%? I recommend backtesting and collecting data on your strategy. That is what I've personally done for a very, very long time, and I continue to do it every single day. Whether that's journaling, whether that's going on FX replays and collecting more data on the time of when I trade, the confluences that are working for me consistently that line up with either my strategy or even my entry model. Collecting data is something traders overlook so much. You have to treat trading as something real. It's not something you can just get on here, learn a few months, and make quick money. That is not what trading is. So again, the step one to how to master and how to succeed with prop firms is mastering your strategy on going on demo accounts, paper trading, backtesting, and collecting data on your account, data on your strategy before you even touch a prop firm account. Step two of how you're going to find success with prop firms. Stick to your rules. I know you hear this everywhere, social media, your mentor, I don't care who is telling you it. They're telling you it because they are wanting to see you succeed. This is one of the most important, if not the most important rule that people might think is so simple, but it works, and it's true. Sticking to your rules. You have to make your own rules for yourself. You can learn from other people, you can use other people's rules as well, but you have to have a set amount of rules that you go into the market every single day and you use and you stick to them consistently. Everything is about consistency. So some rules that I personally use that you can start using is not chasing the market, right? I always use limit orders. I tend to use limit orders on all my trades. And if I don't get tapped into my trade, I let the market go wherever it wants to go. Again, I don't chase, I let the market come to me. Because if you chase the market, if you have FOMO, if you have any of these mental or psychology issues that come in when you are trading, you are going to lose. It's just the truth. You must stick to your rules and you must be able to go into the market every single day with a set amount of rules that you're going to be consistent with every single day. Step three, risk management. Okay, you're probably looking at all these steps. You're like, okay, I was expecting some hidden strategy or some hidden step-by-step process of how I'm going to become a profitable trader and actually get consistent payouts. That is not how life works. That is not how trading works. There is no hidden strategy. There is no hidden rule book. There's nothing that's hidden in, anything with trading or anything in life that's going to make you instantly successful. It's about having consistency and sticking to what works. I'm very firm on if it ain't broken, don't fix it. Risk management. This is the key to success, especially with prop firms. Even live accounts as well, but prop firms especially because, again, they are built for you to lose off of your psychology issues, off of your over leveraging, over trading, anything like that. That is how they win. That is how they take your money for you. That's how you're going to blow 50, 100 accounts, and that's how you're never going to see a payout if you don't actually lock in and stick to your rules, master your strategy, and master your risk management. So again, prop firms are built for you to lose, especially when you are not managing your risk or over leveraging. So we're going to go kind of back into the sense of your account size. I know I've been talking about this a lot because it's such a big issue with traders, especially that are my community, that I see every single day and why they're blowing accounts. Your account size, let's say a 50K account. We're just going to keep talking about that because that is the example for the video. Your account size is not $50,000. Your account size is your minimum loss limit. If you have, think about it like a live account. If you have $2,000 that you put into a live account, what is your account size? $2,000. Exactly with the prop firm. You can only lose $2,000 before the account blows, but yes, you are given the $50,000 worth of buying power. So manage your risk with the minimum loss limit of the account, whether that's percentage wise or money or dollar wise for these trades or for your daily profit or daily loss limit on the day. So again, if you're on a 50K, you have a $2,000 limit. Depending on if you're on a funded or an evaluation stage, it kind of differs of how you're going to manage your risk. But again, please manage your risk based off of your minimum loss or where your account balance is sitting. Alrighty, so we went over what a prop firm is. We went over how they work. We went over how they're built for you to lose. And then we just went over how you are going to find success with trading prop firms. So now the last thing I'm going to get into is my personal favorite prop firms and my personal least favorite prop firms, right? So the first prop firm that I personally use and is my favorite prop firm of all time is going to be TopStep. I personally think TopStep has some of the best rules and they are very consistent with their payouts. There is no shadiness going on with their company or anything with their business. So I think TopStep, especially TopStep X, for new traders because of their rules, is a perfect prop firm. If you guys want me to make a video on that, let me know. But yeah, Top Step is going to be the first best prop firm out there. Number 2 is going to be Apex. So lately, I know a lot of people just went, what? Okay, Apex lately has gotten a lot of backlash with something with payouts, right? With Apex, their rules are much more difficult than Top Step, but that is why they always have these 90, 80% off deals, is because they're looking for new traders to reel in with those low prices so they blow their accounts. So if you're actually a great trader, if you're able to, go use these 3 steps I just showed you guys of mastering your strategy, collecting data on it, journaling every single trade every single day, sticking to your rules, and also having good risk management, then you will find success even with Apex. So I'm funded with Top Step and Apex. I've gotten payouts with both prop firms. So again, that is why those 2 are my top 2 prop firms. Number 3, Alpha Futures. So I've never traded with Alpha Futures, but a lot of people in my community, even some of my friends who are, who trade prop firm accounts, they use Alpha Futures, and I've heard great things. So that is going to be number 3. And number 4 is going to be my funded futures. I've heard great things, but again, I have never traded with them. So now getting into the worst prop firms you can trade from what I've heard. So again, I've never traded these prop firms on that list, but I've heard bad things about payouts, rules, and all of the above. So the first one of one funding. So I've heard horrible things. I've heard they don't pay their traders out, stuff like that. So one of one is going to be the worst prop firm there is out there. Number 2 is I'm gonna get a lot of backlash for this one, is Take Profit Trader. So Take Profit Trader, I'm actually looking into going with them and actually opening up an account with them. But the reason I say Take Profit Trader is one of the worst prop firms is only for beginners, only for new traders. So the reason I say that is because their accounts are a little bit more expensive, but that is due to daily payouts. So they offer, once you become funded, you can take out daily payouts, but obviously there are rules with that. And I feel Take Profit Trader, I feel like that's more of a marketing scheme or a marketing kind of a marketing scheme, right? I think they hook beginner traders on, oh my God, if I go with them, I'm going to be able to have daily payouts. I'm going to be making 2,000 to 3,000 a day. I'm going to get rich. No, that's not what's going to happen. You have never become funded. You have never gotten a payout. So do not go with Take Profit Trader when you are beginning out. Number 3, I'm very big on this one. Any instant funding prop firms. So there are prop firms out there who the accounts will be a little bit more pricey, but they will offer you instant funding. That means you get to skip the evaluation phase. So I kind of see it as anything else in life. If you are able to skip the line in anything, or if you are able to, fast forward the process, it's not going to end well, especially if you are someone who is serious about trading and who wants to make this lifelong and long term. I think instant funding prop firms is going to be horrible for new traders. I think they just hook the idea of, oh my God, I don't have to stick to my rules. I get to gamble, right? That is what they hook new traders on. So I personally recommend staying away from any instant funding prop firms. Alrighty, so that kind of concludes the video on prop firms. We went over what they are, how to use them, and how they are built for you to lose. I also gave you guys a step-by-step process of how I personally found success with prop firms and how I'm able to take consistent payouts monthly. Again, one thing I want to go over is I'm not telling you that you're going to find success. If you look at the statistics, around 1% of traders actually have consistent payouts and find consistent success with these prop firms, because again, they are built for you to lose. But I feel if you go about it the right way, that you can find success yourself. Alrighty, y'all. I wanted to add one last thing at the end of the video, and that is to please do your research on the prop firm that you are going to go with. Some prop firms might work for me, or other people that might not work for you. So make sure to do your research on their payouts and on their rules. Also, if you guys are struggling with finding success with a prop firm, whether that's passing your evaluation stage, whether that's getting a payout or even consistent payouts when you're on a funded account, check out my community in the description below. Here are some proven testimonials right here, and right here. So yeah, again, appreciate y'all watching, and I will see y'all in the next one.